JBlog, 31st of May 2009. The market is continuing to frustrate the bears by refusing to go down. From a technical point of view, there's really no reason why this on Friday should have happened, yet it did. On closer inspection, although, we can see, if we go to a minute chart for the day, we can see that jump that accounted for this big candle here that broke through resistance was actually happened in the last in the last 15 half an hour. Actually, here is a 1 minute chart. 1 minute is maybe a little bit too big. Let's look at a 2 minute mark, a 2 minute chart, and if we see what happened all day long, the market actually went sideways, didn't do much of anything, and then in the last hour of the market, starting at about 3 o'clock, it shot right up and went 13 points up from here. So that is usually what happens in the last hour is usually commercial and large traders that are taking these actions. It might very well be a setup to take it down and try to entice some more bulls into this market. We don't know. We really don't know. But anyways, the action was contained in the last hour and isn't really indicative. Having said that, the market is going up. I can't argue with that. And currently my bearish position is not being confirmed by the market. On the other hand, there are no new highs being set. If you look at this, the highs were still set in the beginning of May, and this candle is yet not a new high. So for the time being, my point of view has not really changed. I continue to believe that this market will have to come down. Eventually, it might just take a little bit longer than I originally thought. For the time being, though, the market is definitely saying I'm wrong, and my short positions in GS as well as my SKF position is underwater. And I'm okay with that because my position was small enough for me to be able to actually handle that. Going over to the world of oil, again, oil has had a phenomenal run in May. May has been a very strong month for oil. As you can see, the last week has been basically every day $2 increases. Quite the run. That's actually my play for the week. I am going to buy into DTO. DTO is the inverse oil double, which means it will be going up if oil goes down, and it will be going down if oil goes up. Right now DTO is trading, it closed on Friday trading at around 81. It has ran all the way up to 250, then to 200. It's been dropping ever since. It shows it's oversold here. Just like SKF, I'm going to use this as a hedge because I still believe that the main market will drop sooner or later. And if it's a little bit later, then that just gives me a chance of picking up these positions even cheaper. So I'm going to scale into a small position of DTO on Monday, and then I might increase that position. If it drops, I would like to pick it up for 78. 75 would be even better. I can see that oil already went up in the Far East in the Australian sessions for Sunday night, so Monday might be even higher. Maybe I can pick this up even lower. That would be nice. SKF hasn't really done anything, but it hasn't made any lower lows. GS we've already looked at. It has sort of made a higher high, not quite. It's a bit of a violation here. Um, Again, I wouldn't mind picking up another piece of GS, shorting another piece of GS at 155. In the meantime, I'm still bullish on steel for the time being. As long as the market goes up, steel will continue going up. Steel is one of the main destinations for investments. My two favorites, STLD and Vale. STLD has broken through some resistance here, there at 14, and has broken through to 15. That looks very good. I like it. I continue holding it, but I have that hedged in a spread, so I can make money either if it goes up or if it goes down. I'm happy on either. Vale looks similar way. Vale is again very strong. I like these two stocks, so that's what I have on the long side of things. And that's about it for today. I hope you have a profitable week and happy trading.